Today we will be looking at ride sourcing and sharing. Ride sourcing and sharing is when you, as a driver, make a car available for public hire for passengers using a third-party digital platform to request a ride, for example Uber, Ola and Didi, and you use the car to transport the passenger for payment or a fare. Income received is subject to both income tax and goods and services tax. You will need to have an Australian business number and also be registered for GST. For GST purposes you will need to register for GST from the day you start, regardless of how much you earn. To pay GST on the full fare, and to lodge business activity statements monthly or quarterly, you can't choose to lodge annually. It is important to note that where the fare charged exceeds $82.50, you have to provide your passengers with a tax invoice for the service provided if the passenger requests. The tax invoice must be provided within 28 days of their request, and document your ABN. A tax invoice is distinct from an ordinary invoice that you or the app would issue. For income tax you need to include the income you earn in your income tax return as business income as you are operating a business. Only claim deductions related to transporting passengers for a fare and apportion the deductions if there is any private use. Keep records of all your expenses and income. You can claim expenses incurred while providing ride sourcing services, including water and lollies, tissues, newspapers, fees or commissions charged by the digital platform, parking fees, tolls, depreciation on your motor vehicle, fuel, car cleaning, car lease payments, car insurance, car registration, and car repairs. You cannot claim some expenses incurred while providing ride sourcing services, including driver's license, fines such as speeding or parking fines, personal or private expense such as meals, and fuel tax credits. You can claim deductions for expenses to the extent that they directly relate to the provision of the ride sourcing service. Where some expenses are business-related and private, the expense will need to be apportioned to ensure that only the business-related portion is deducted. You can determine your business-related portion by keeping a diary of specific business usage throughout the year, claiming expenses from an itemized account, using the ATO My Deductions app. If you claim a GST credit for GST paid on an expense, you can only claim the remaining amount, the total cost minus GST, as an income tax deduction. Furthermore, while you cannot claim a toll if the passenger has paid for it, you may be entitled to claim the corresponding GST credit. The value of the deduction can be determined by using either the logbook or cents per kilometer method. Logbook method. You can claim the business use percentage of your car-related expenses, which is determined by using a logbook to maintain odometer readings for the logbook period, at least 12 continuous weeks. Cents per kilometer method. You can claim a maximum of 5,000 business kilometers per car, using this method. Your claim is based on 72 cents per kilometer. You generally are unable to claim any other expenses incurred in relation to the car. Refer to our video on motor vehicle deductions to work out how much you can claim of your motor vehicle expenses. You need to keep written evidence to substantiate your claims as well as how you apportioned any expenses, where relevant. You may need to keep your invoices, receipts, logbook and diary entries to support your deductions. As you are running a business, you need to consider other areas such as instant asset write-off and non-commercial losses. We suggest you seek assistance from Australian Tax Clinic or the Australian Taxation Office. Thank you for watching our video.